Good afternoon, everyone, and welcome to the Fiscal Philosophy YouTube channel. I want to show you a little bit of the kind of stuff I've been working on behind the scenes. Some of the buys, the sells, the high conviction plays, the riskier, friskier plays, and just give you an idea of what I've been up to, what I've been thinking about, so that you can have a little bit of insight into the inner workings of my noggin. And before anyone asks why suddenly I'm on Robinhood instead of Schwab, the Schwab account, the value portfolio still exists. This is a separate account that's been created for the benefit of my entire immediate family. And so we'll call this lovingly the family account. Now, our largest common stock position in aforementioned account is Alphabet Class A stock. 160 shares, and as you can see, this is not what's driving our year-to-date return. Our year-to-date return is 25%, 5 times the return of the S&P 500 year-to-date, I might add. Now, we are in the positive here, but this is a result of basically DCAing into Alphabet. So there were shares that were bought like $200 and other shares that were bought at like $140. Okay. And this is one that's just kind of been slowly added to over the course of the first few months of the year. And it's broken into the positives, which is good. And honestly, Alphabet, Google, is now the most, it's known, it's being mentioned all over that it's technically the most profitable company in the entire S&P 500 right now. So it's also trading at a very modest upper teens multiple of earnings, 17 or 18 PE or something like that. So this is with solid, substantial double-digit growth in multiple business segments. So that stream of earnings should continue to grow. Now, people are talking about the CapEx, when the depreciation starts to hit, that it's really going to drag them down. But I would counter and say, hey, if that CapEx is spent to expand, for example, Gemini, which I know they're going to be starting to realize some revenue from Gemini pretty soon here, or if it's being spent on their cloud business, which is growing at like a 25, 28% per year, and that could continue for the next years, their CapEx could very well pay dividends, both figuratively and literally, to us shareholders. So I don't have the same reservations people have about Google. There's also the search versus LLMs dilemma, which I don't think I think it's overblown, essentially. So we believe very much in Google, and I think its position sizing reflects that. And if you have been following me on X, you will have seen me potentially saying over the last few days the words Google leaps without really any further explanation. Well, this is the explanation. There is one Google Leaps contract in this account. So we already have a substantial common stock position. Momentum has just kind of been meh so far this year. However, my sense is that momentum is starting to shift back into Google's favor. Now, here's the issue I have. I could keep adding more and more shares, of course. And, as we're now in the positives, average up. But here is what this Leaps contract essentially gets. It magnifies the returns on that Google stock. How so? Well, what each contract represents is essentially control of 100 shares. This is the $150 strike for September of 2026. So that contract is in effect for that amount of time. someone else had to put up the 100 shares as collateral for this contract. If you've followed me a while, you know usually I'm a seller of options more so than a buyer. However, I think I've expanded my horizons quite a lot over the last year or so, and I'm starting to dabble in a few different things. So this will essentially give me the upside if momentum has shifted in the favor of Google. And certainly the fundamentals are there, right? If the fundamentals are not there, the financials, I'm not even going to really be looking at it. But now we have both the fundamentals are on the side of Google and the momentum seems to be going in their favor. So basically, my gain on this stock, even though I have only 160 shares in this account, will basically be as though we have 260 shares in the account. That is essentially leverage. And as you can see, the cost basis of this contract was $3,470. The actual 100 shares of Google would have tied up over $17,000 to get the same amount of upside potential. And it's basically just letting me deploy capital more efficiently in that sense. Now, the risk, of course, is, wrong. Google's momentum isn't good. In which case, yes, the 3,400 is at risk. However, it's really about risk to reward. And with Google, if you have both the fundamentals on your side and the appearance that the momentum may be shifting, I think the risk reward here is relatively decent. And I prefer, instead of tying up an additional $17,000 to $18,000 on more Google stock, only tying up the 3,400 because there's a lot of other good ideas out there. I think it's a good way to kind of balance that out. My desire to have more exposure to Google, but still have some dry powder for other ideas. So this name has been a big driver of gains across accounts that I'm involved in. TSSI, as you can see, we've got a really good cost basis. Full disclosure, in across accounts, a lot of it has been sold and profits taken off the table. So essentially what we have left is 1,000 shares that are currently covering 10 sold calls at the 25 strike. So obviously I'm missing out on some gains if the price stays above 25, but well over a 100% gain still on those shares, plus the premium that was collected. If it cools off and gets back below 25 before this executes, I'll probably sell covered calls again, just because I'm happy to just collect premium until the shares get called away. Essentially, what has happened with this stock, I think, is at this point, the earnings have fallen behind the price, or more, let me rephrase. The price has gotten very far ahead of where the earnings are, to the point where the hope was the stock might be worth this sometime in the next year or two if things keep going well. And it's just the price is there now. And it happened in a much shorter time than we all really expected. Now, if it craters really bad and like goes way down again, I could re-enter if it falls into the teens again at some point. But at the moment, I'm happy to, if it goes into the 25 range and I can sell covered calls again in the 25 or 30 range on this block of shares, I'll probably just keep doing that until they get called away, and that'll be that. But TSSI has been a big winner, made a lot of money, very happy with it. Those of you that have been paying attention to the channel and stuff have seen me talking about it over the last probably couple months or so. And a lot of credit to the first person to mention this stock to me was Stabulo. He's on my Discord. You should consider joining that, link in the description. Very good stuff. So the last one here, I'll talk about on this video. It's, I have a lot more interesting positions going on and different things I'm doing, but for this video, I'm going to wrap it up on JXN because I want to make a dedicated video about this sometime soon. Essentially, this is a company that sells annuities. Annuities are they're an income product that people often buy when they're close to retirement and they just don't really want to think about managing anything. So they take that money, they invest it in things that they think will make more money than the income that they pay out. They have substantial asset reserves, way more than anyone else in the industry, at least like proportionally speaking, from what I understand. And of course, part of what they do is they hold hedges, like different. They don't actually get detailed specifically on like earnings calls about what specifically they hold as hedges. I assume that they try to keep some cards close to their vest to not reveal too much because they want to have a competitive advantage. But if you look back in the past, and credit to Andrew with the Capital Mindset Group for explaining this to me, you go back to 2022 and they basically didn't get dinged so badly during that dip you had in 2022 because of how good their hedging was. So they seem to be very good at managing risk and keeping a substantial buffer, which leaves them with a lot of leftover assets with which they can basically return capital to shareholders through substantial buybacks. They also have a dividend, but it seems like buybacks are kind of the main thing right now. And they can buy back a ton of shares with what they have basically sitting in the bank. So this is a pretty simple, straightforward path to a pretty solid return. I had sold a cash secured put maybe a month or so ago at the $85 strike. The stock was like 84 or something, so just below 85 on the expiration date. So I got assigned with an effective cost basis of $81.70 because of the premium that I had collected on the cash secured put. And the stock has started to go up in the meantime since then. And hey, it's been a week or so, and we're already holding the stock, and we're already nearly a 10% return on it. I'm potentially looking at increasing the stake that that's held in this particular company because it does seem pretty strong, a solid risk to reward, a clear path towards a return. So all things I like to see. They seem to be all about rewarding shareholders, and I like to see that too. So yeah, that's JXN. If you liked it, make sure that you hit the like button and subscribe. Help me out in the algorithm. Join my Discord linked in the description, and catch me Saturday, 8 p.m. Eastern on the Cashflow Kings Live YouTube channel, where our guests are often some of the very same Discord members and investors that I mention brought certain stocks to my attention or taught me certain things. These are, I think, pretty high-level, detailed conversations that can broaden one's horizons and can serve as educational as well as entertainment content, because we do sometimes delve into the drama that's out there on the investing community on social media, YouTube, Twitter, and all that. Good times had by all. Take it easy, everyone. Have a wonderful weekend. Hope to see you tomorrow night.